Hey guys, welcome back to the channel. So I just wanted to jump on and do a very quick emergency video because the FOMC meeting, there were comments from Powell where he said, or there was actually the dot plot released, which actually showed that the Fed are looking to now only cut twice next year. Before that, or before today, they were talking about cutting four times. So the market is currently repricing less interest rate cuts for the foreseeable future throughout 2025. Obviously, less rate cuts, there's less incentive for investors, for savers to actually come out of cash deposits and put their money into risk markets because they can get that interest rate from their cash, so they don't need to take on excessive risk by going into the markets to try and generate yield. Okay, so that's one thing. Also, cost of capital is actually more expensive if rates are higher. So companies can't go and borrow money at such low rates, so they're less inclined to go out and borrow money and invest money. So capital spending is likely to be less. And obviously that has knock-on effects to job creation, etc., etc. So we're at the moment just trying to digest what this news is and what it means for the markets. And we've seen stock markets really, really sell off fairly hard. So obviously we've got Bitcoin here, and we'll come to Bitcoin in a second. Let's actually start with the dollar. So if we look at the dollar new highs, so obviously we know that a strong dollar is not the best thing for risk assets. It puts pressure on cryptocurrencies. It puts pressure on US stocks because they've become relatively more expensive to buy. You need more dollars to buy these assets now because the dollar is relatively stronger and people are less easily able to buy the dollar if the dollar's gone up in price. So it, in a way, reduces demand for them. It's not the most important thing in the world. It's not going to mean a death sentence to the bull run if we have a sort of strong dollar. But certainly today, so far, the market has reacted very, very sort of positively. The dollar market has reacted very positively to what happened at the FOMC. Now, if we move on to the stock markets, we can see that stock markets have had a sell-off. So these are the S&P mini futures, or the ES, and it is down literally on the day, it is down about 3.14%. We've got like 3.05% on the top there. And if we look at the NASDAQ, we can see the NASDAQ has been hit the hardest. Obviously, a lot of tech companies in the NASDAQ, they tend to be sort of highly geared. It's currently down about sort of 3.5%. If we actually look on the day, 3.69%, it is telling us that this market is down. So not great. We've already opened up for tomorrow already on the NASDAQ, so we can see that we're starting to trade in tomorrow's candle. And obviously Bitcoin's been hit hard as well. So Bitcoin currently, we just sort of zoom in a little bit, we can see currently down 5.25%. And if we just drop down to the 4-hour, we can see, we talked about this on this morning's video, we've come up, we've tagged this ascending trend line, price has now rolled over, and we've broken down below the midpoint. This is really on the back of FOMC, or going into FOMC. It looked like we were going to hold. Actually, let's just go on the hourly so we can actually see the time here. Yeah, it was really sort of 7 o'clock UK time. So it was really off the back of the FOMC, and obviously the dot plot being released that has caused this market to break down from 105,000, close to 105,000, all the way down close to 100,000. So nearly a $5,000 move. And we seem to be finding a little bit of support here right now. So we've got this ascending trend line starting to come into play. We've got the sort of bottom of our channel as well, just below. We've got the all-important $100,000 level. We go to this chart. I think I've drawn some Fibonacci's on here. Yeah, I have. So let me just talk you through those. So below our 382 and we're currently heading towards our 0.5. Markets do like to retrace 50% of recent swings. It's quite a common sort of target for me when it comes to looking to enter into things. So I think we'll probably see a bounce just under 100,000 if we actually get there. And this could be a level that obviously we start to turn around from with this ascending trend line. And if we go back and look at our sort of larger swing, all the price action from November, so the first dip after the breakout, we can actually see that this also lines up with our 382 as well. So we've got some Fibonacci confluence around that area. Plus we've got this ascending trend line too. So I quite like this area at around about sort of 99.5 thousand for a bounce. It's also our high from November as well, our November high. So like I say, that's my current target. Do we front run that possibly? Do we sort of come below it slightly and catch the liquidity below this trend line and form a bit of a wick? And then what you might see is come down to an area like here. We actually just drag that down. That's what you sometimes see. These sort of parallel lines coming into play. So do we actually go? I mean, the next support lower would be around about sort of 97.5, which would be our 618. And I really want to see a strong reaction from there if we did get down there to get us back above this 99,500 level quickly. I think it's really important that we turn 99 to 100,000 into support and we stay above sort of this region and start to re-accumulate and make our way back up over the next few days. So that's what I'm looking at on Bitcoin. Obviously, it's hard to really prepare for this, but we did talk about pullback targets in the video earlier on today, and we said that look, if Bitcoin loses this midpoint, then it's very, very likely we come down to around about 91.5, which we have done. We've lost that. And then I said it's likely we come down to this 99.5, which I'm still thinking is a target right now. And obviously we'll reassess. But I think from there, like I say, after that, next target is possibly down here at 97.5. So we're just going to take it level by level. If we look at Ethereum as well, Ethereum's starting to break down. So Ethereum's currently on some trend line support. So I've drawn in a bit more support on this chart from this morning. Obviously, we talked about it coming into this level if we lost the sort of longer term sort of descending trend line support. So that's exactly what we've seen. And we're currently, looks like we're trying to get a bounce from here. But if we don't get that bounce, then the next stop will be this 3561 and then coming down lower to tag the November highs at around about 3434 or 3430, call it. So we've got some pretty some pretty big levels coming up if we do continue to roll over, and let's just mark those on the chart. So that also lines up with our golden pocket from our November low to December high as well. So I expect that will be quite a big level of confluence for Ethereum. And then obviously we've got these lows here. Obviously this was a sort of major area of support on our ascent up to above 4,000. And it also lines up with our 0.5 fib. So really, we're playing the fib levels, we're playing the horizontals, and let's see if Ethereum does sort of break down a bit lower. Maybe this level coincides with Bitcoin coming down to 99,500. And then, like I say, we'll take it from there. If we don't get the bounce there, potentially we come down a little bit lower, sort of flush out this low. And that's where potentially we might get some relief in this market and then start to mark up again. And Solana as well. Solana threatening the lows of December now from that December flush we saw. And I think if we lose that, if we can't maintain this level, then potentially we come down to around sort of like the 195, 190 area. And we've got some support confluence, a cluster of ascending and descending trend lines in that area. And like I say, normally I wouldn't give too much weight to these sorts of things, but I think you can also say there's a horizontal in there as well. It goes back to the high from July. So, potentially that we've got some support confluence around sort of like the 190 to 195 region. So that would be the next level. I think we'd probably take our Solana, Pepe as well, starting to pull back. Looks like it might come all the way back down to this sort of 0.00017 area. So prior all-time highs, maybe makes another retest, or maybe it just comes down and sort of front runs that. But yeah, Pepe looking pretty heavy here. So look, they're my targets. I think just sort of stepping back here, if you are exposed in long positions, then I think it kind of makes sense to probably have at least about 50% in reserve. That's my current situation. I've got about sort of 50% of my leverage account in the market exposed right now. I've already entered, or I've already added. I was already long, of course. I've added a little bit. I've bought it up to around about 50%. And if we take out this level and move to the next level, I'll add in a little bit more. This level, I'll add in a little bit more. Down to here, I'll add in a little bit more. This is on Bitcoin. So really sort of down to around about 90,000. I'll sort of add bits in. Can we go lower? Yes, we can. Of course we can. There's no ceilings, there's no floors in these markets. So there's every potential that we actually come down and we actually fill in some of this inefficiency candle here and we make our way down to around about sort of 80,000. I mean, if we were to come down to 80,000, then that would be a sizable correction of around about sort of 25%. So when I'm looking to get involved here, obviously I need to be a little bit cautious. I can't just, add 50% here and then get 100% all in at 95 and say, right, off to the moon we go. Obviously, as we come down, I'll be sort of very, very slowly scaling into the position myself here. And the same on Ethereum, the same on Solana. I'm really looking at this like, what's the worst case scenario? And if we do go to the worst case scenario, A, can I handle it in terms of my margin requirements, in terms of my account, in terms of my liquidity? And B, can I will I actually have some ammo free to actually deploy to take advantage of that type of drop? So, like I say, it's pretty premature to talk about coming all the way down, potentially back below 80,000 into like the 70s here. But obviously, this is quite a big shift in the markets now. Does this really impact directly Bitcoin and crypto? The fact that we might only see 2 cuts instead of 4 cuts. No, it doesn't. It doesn't. It's overblown. It's a knee-jerk reaction. The market is throwing what they used to sort of label as a taper tantrum when the market's expecting stimulus and it doesn't get the stimulus, and then it starts throwing a bit of a tantrum, saying, "Come on, stimulate me, give me money, give me drugs." Like the markets have become like addicts to cheap money, to easy money, and if they don't get it, they throw their toys out the pram, and that's kind of what we're seeing the markets do right now, especially with stock markets. Obviously, they're throwing a strop, they're throwing the toys out the pram. They're saying, "Come on, give me money, give me more cuts, give me more stimulus, or else we're going to go down." It's it's a knee jerk, and I think at some point this will resolve. And I mean, right now, Bitcoin has broken no structure whatsoever, and as long as Bitcoin remains above this November high here and starts to pull around at this 99,500 level, that's absolutely fine. Where I would get concerned is if we break out below, I would say below these lows here, below 94,000, closing below 94,000, this becomes a concern. It's like, okay, now coming down here is a possibility. Up until that point, it's really not. But yeah, I'd say worst case scenario, looking at 80,000. And, I very much hope I'm not referencing this video in a few weeks and saying, look, I told you we're going to 80K. I'm not saying I think we're going to 80K. I'm saying that is a possibility in terms of worst case scenario. Obviously, best case scenario, we bounce here, we come a little bit lower to around about sort of maybe 97 and start to put a bounce in. So, and that's what I think is the most likely scenario. That's why I'm positioning sort of 50%. I'll probably, if we come off a bit more, I'll probably go to 60%, 70%, and obviously save 30% for if we sort of come down to 90K. And sort of from there, if I see that we're looking really heavy and it looks like we're going to break down, I will ultimately have to de-risk and de-leverage and look to sort of get in again to the market at lower prices in the low 80s. So that's the way I'm going to sort of play this. I expect us to stay above sort of 90, 91,000 for now. And I'll just be seeing how the price action looks over the next few days. In terms of Ethereum, because my big trade idea right now is Ethereum, and Ethereum taking off over the next few months. Obviously, I've said that Q1 is historically very, very bullish for Ethereum. Ethereum looks like it seems to be breaking down here right now. Obviously, Bitcoin's holding up, but Ethereum seems to be on a bit of a breakdown. So it's looking fairly likely Ethereum could come down to this next level around about sort of 3,400, the 618 level. Obviously, if it doesn't hold this 0.5, but looking at this from the daily chart, this is looking pretty ugly here for Ethereum. So I don't see why we come back down to this level and not actually flush through it a little bit lower. So potentially we're going down to 3,400. I will be a buy there. I wouldn't add there. And then sort of 3,000, sort of 240. Again, this is a big order block. It's the 782. And I think worst case scenario, we'd come all the way down sort of towards 3,000, maybe even under 3,000 to around about sort of 2,800. I don't think that's going to happen. I really, really do not think we're going to go that low in terms of the price of Ethereum. And if I just put on a sort of Fibonacci from this low here, no, I've caught that wrong. From this low here to the recent high, I just want to see where 50% is coming in. 50%, 3,100. Okay. So 3,100 is pretty much here. I might have already drawn that fib in. Yeah, I think I actually have. It's a little bit off, but I already no, that's from that high. So no, that's something different actually. So 3,100 is basically the 50% level, which comes in there, it comes in very similar because obviously this is 50% of the range. So yeah, it is going to be relevant, but I'm just going to mark that on there because for me, 50% level is a very, very key level as well that we should watch out for. So if things really do start moving to the downsides, I mean, a move down to that level from the high would be, I'll actually grab it, would be about 23, 24%. Obviously similar to Bitcoin reaching the low 80s, around 25%. So I think, yeah, it's just interesting to see. I'm always looking at these markets, especially when I'm in leverage positions. I'm looking at this and I'm saying, what is the worst case scenario? Where am I going to get liquidated? Where am I going to get wiped out? Can I withstand a move down to 3,000 on Ethereum? Yes or no? Obviously, the answer has to be yes if I'm leveraged long. So that just kind of helps me know what I need to prepare for in terms of, maximum downside. Like I say, I think we'll probably grind things out here. My personal opinion is that we probably come down to this 618 and hold there. So that move in Ethereum from high down to low is going to be around about the 16% sort of down move. And if we just go back over to Bitcoin and use our chart with a few more drawings on, then we're to see sort of a move back down towards the 91,000. It's close to 16% as well. Obviously, Bitcoin's less volatile than Ethereum, so maybe we just see sort of 95. Like I say, I still think we can see sort of 98. I think the other chart had a little bit more in terms of support levels yet. So again, potentially we're targeting this 618 level here at around about 97.5, and on Bitcoin that'd be about 10% move, so a double digit pullback, which I think would be totally reasonable for Bitcoin to make. So I'm personally thinking maybe that's where we go. Maybe we go to 97.5 on Bitcoin, and on Ethereum, maybe we come down to sort of 3,100. That would be pretty ugly. That would be a pretty nasty flush out on Ethereum, especially considering the amount of longs or the amount of people that are bullish on Ethereum going into what historically is its most bullish month and bullish quarter, obviously Q1 and January. So I think I've probably rambled on long enough in terms of giving you my thoughts. Bitcoin having a go here at taking its lows out and coming in to test 100K again by the looks of it. So, like I say, next support 99,500. If it fails that, sort of around about 97s. And then if it fails that, I think we're at risk of a sort of full on breakdown to the low 90s. So, yeah, let's play it level by level. Obviously, if you're on leverage, stay safe. If you're on spot, just chill. I think you're going to be fine. This is probably a good opportunity to add to spot holdings. Like I say, if you're on leverage, keep the leverage low, keep the stops tight, or keep the margin to hands. Last thing you want to do is get liquidated in a situation like this. And yeah, obviously, I'll be back tomorrow morning with a GM update. So we'll see what happens overnight, and I will talk to you all again then. Good night, everybody.